The views expressed by our guests are their own and do not reflect the official stance of their employer or any affiliated organizations. Welcome back to the Counsel House Podcast. I'm your co-host, Daniel Abramoff, and today we had another special guest, recently retired General Counsel and current board member at Sofi, Rob Lavit. Today, Rob talked about his experience in joining Sofi at an early stage of a startup and the different risks and rewards that came along with it, along with his fruitful career in law. I hope you enjoy. Rob, thank you so much.
Thank you.
Leaving law school, you jumped into a big law firm, and would love to get your thoughts on that experience and how that sort of shaped and shifted everything for moving forward.
Sure. So first of all, I recently retired as general counsel at Sofi, so just wanted to be clear on that. I started my career at a firm in D.C. called Howery & Simon, which was a large, pure litigation firm that no longer exists. But my first day, I was put on a case that went to trial in Houston. And literally my first year, I spent almost the entire time in Houston, Texas on a 6-month jury trial. We were representing Meade Corporation, which was one of 39 co-defendants in a massive antitrust conspiracy case. By the time the case went to the jury, we were the only defendant. The Meade had been acquitted in a criminal case the year before, so this was the parallel civil case. The jury verdict found that there was a conspiracy, and Meade had damages assessed against it of $1.1 billion, which in 1980 was a lot of money. And that case taught me about risk. The kind of the folly of going to trial as the only defendant in a multi-company case. So it was a very important lesson for me in kind of assessing risk. And there were great attorneys. There were some fantastic litigation attorneys at Howery, but it gave me a good base in litigation.
Well, the first year in this law firm, you're sent to go live in another state and work on a massive case, right? So that's got to build up a lot of courage amongst other feelings in you. And so pivoting from a firm to the government, what were your thoughts there and what was your experience?
Yes, I left Howery after about 3 years to go be a trial attorney in the Justice Department during the Reagan administration. And I would say it was my second most fun job other than Sofi. Fantastic experience. They just hand you a pile of cases and you're running them, you're litigating, you're going to court quite a bit. So, it really, gives you kind of more independence and you develop on your own. And there were great attorneys at Justice that you can learn from. A number of my colleagues became judges in the Superior Court or the Federal District Court.
After some time in the government, you started to look at other options.
Yes, like many people, I'd say, most people use justice or the SEC as a stepping stone to get back into the private sector. So after 3 years at the DOJ, I went back into the law firm world to a good boutique firm, mid-sized firm, and I ultimately became a partner, a litigation partner, did a lot of securities litigation representing individuals caught up in government investigations.
Sure. And having that background, obviously, I'm sure made you very appealing to your clients. And so from that point, you then decide to make another pivot.
Yes, I pivoted to in-house in 1992. I had friends at Sally Mae, which I didn't really know what Sally Mae was. It was complicated. It was a government-sponsored entity, but a publicly traded corporation, kind of like the Fannie Mae equivalent, but for student loans. And I went to Sally Mae, which I thought was a kind of a sleepy GSE in 1992. And I worked my way up and became general counsel. We had a larger legal department, and I was promoted various times and became general counsel at a pivotal time in the company's history when we were privatizing and shedding the GSE charter. And Sally Mae was the first government-sponsored entity to essentially give up the federal charter and become a state-chartered corporation that could do what it wanted. So That was a pivotal transaction in 2004, 2005, right when I became the general counsel.
You were at a sort of a historical time at that organization. And so around the time of the market crash, you like everyone wanted to find maybe a better move, which then you went back to a law firm?
Yeah, well, Sally Mae, in 2007, we signed an agreement to take the company private in a $25 billion leverage buyout with J.C. Flower, Bank of America, and J.P. Morgan. Now, unfortunately, the timing was bad and the financial crisis was brewing, and the deal took on water, and ultimately the buyers, broke the deal. There was litigation. The whole management of Sally Mae turned after the deal failed, and so I left Sally Mae um, in early 2008 and tried to figure out what was next for me. And I went back into private practice as a partner at a mid-sized firm, Powers, Pyle, Sutter, and Verville, very good mid-sized firm that had a real education practice. So there was some synergy, from my experience at Sally Mae. But it was very daunting to go into a firm with, basically you had been general counsel of a big company and then to go to a firm with no clients and have to develop a book of business.
Oh,
But
yeah.
I developed a really nice business at Powers Piles. I represented financial institutions as well as startups. And by year 3, I was one of the leading billers in the firm.
And what's interesting is, you're working with these startups. In a sense, it's almost like you're building a startup at that law firm.
I would never have been able to do the job at Sofi if I hadn't been in Powers Piles, because you had to be very self-sufficient. You had to find the business, keep the clients happy, bill them, collect, do everything as if you were a sole practitioner,
Right.
essentially. Even though there was some structure, there was a practice, and there were some synergies, but basically it was everyone for themselves. So I think that taught me the self-sufficiency to move, when the Sofi. So I had been representing Sofi. The founders of Sofi found me because I knew a lot about student lending, and their first business was going to be student lending. It was actually a different business than how the company really grew, and I can elaborate on that if you want.
Sure.
So originally, the company was going to be a peer-to-peer lender, raise money from wealthy alumni at top-tier schools and lend it to students at the school, because we were in a very low interest rate environment, but grad students and undergrad students were paying high interest rates on their federal student loans. So there was this arbitrage and perfect opportunity for a startup to basically, get a greenfield and build, a niche. And so when I got to Sofi, we were doing the peer-to-peer. We could not scale that. And then we had an epiphany that there are all these graduates, who've graduated, who have high rate student loans, but they have income. So we could actually underwrite them, undercut the government rate. And that was
Oh, wow.
basically how Sofi started.
That's incredible. And it sounds like early on you were there as well to make that type of change with them.
Yeah, I was employee 33. I was the first lawyer. The company was, when they asked me to be general counsel at first, this is crazy. Why would I do this? This is a pure startup. They hadn't even raised their B round. And it was in San Francisco, and I didn't want to move to California. I was pretty well established in the DC area, didn't want to move, but they were flexible because we actually started with a small office in DC. We owned a broker-dealer. So 140 round trips to San Francisco later, by the end of my career there.
That is incredible. That really is. And I think taking that leap was obviously the greatest move you could have made. And so, you're looking at a startup that turns into a major financial organization. And how, what are some of the challenges that go from taking a startup into that orbit?
I think you have to have the ability to take risks, and you have to move very quickly. You have to find your niche before other, companies get there. And that's what Sofi did. So you have to be decisive. You have to understand, what's the risk that a startup can take that an established company could not. So for example, the idea of refinancing borrowers from a federal loan to a private loan was something that the biggest banks and Sally Mae, frankly, were not willing to take because of the CFPB risk. That was in the days of Richard Cordray, and the CFPB was aggressive. But ironically, we had a very good relationship with the CFPB when we started the company, because they saw that we were helping people save money. And so, the CFPB would actually field some calls from investors saying, is Sofi legitimate? Well, they would say yes. So, we had that advantage, I think, of being a scrappy startup. And also the market the big banks looked at the market and said it's not big enough for us to play in, but it's actually a pretty large TAM. That's one of the things in a startup. You learn a lot of jargon that you wouldn't know as a lawyer, private practice. TAM is total addressable market.
Interesting. I think probably a lot of our listeners don't know that, but now do. That's very fascinating. And so you're building up this organization. Obviously, you have to build your team up. How do you scale up your legal team so quickly, and what does that look like?
Well, just to give you a sense of kind of how Sofi grew, the first year I joined in the fall of 2012, and we really had just begun the company then. And then we did our first warehouse line in early 2013. It was very difficult because we had raised $60 million or $80 million in a B round, and we lent that out, which you would think is odd, but we had to prove that the market existed before Wall Street would lend us money. Now, we did that warehouse line in March of 2013. I'll never forget it. It was painful, very painful, bad terms. But once we did that, it proved there was a takeout. We did our first securitization, later in that year, and then we were off to the races. So in 2013, I think we originated $250 million of student loans. 2014, it went to $1.2 billion. 2015, $5 billion. So you can see that explosiveness. Now, originally, I kept the legal team to myself. I hired one of my ex-Sally Mae colleagues as a consultant to help. And then we brought on a second lawyer, kind of, as you could see that the business was growing and that we were going to make it. And then as we added new products, that's where we started to grow the team. And so, we kept the legal team lean while I was there, but I had responsibility for compliance, and we started with one compliance officer. And by the time I left, I would say the combined compliance, legal, and AML team, which I also had responsibility for, was 200 people.
Wow.
So we grew quite a bit. And it's hiring good people who have contacts who can bring in other people.
I was going to ask you what are some key attributes, but it sounds like that would be a main one, right? Where if you can build your team, if you can bring some value to us as well outside of your own practice.
Well, I would say I'll separate legal and compliance, but for the legal team, what I was looking for were people who had some experience, because I don't think, smaller companies are really equipped to train in-house lawyers. So I really looked for somebody who'd come from a law firm or government, who had significant experience, who could hit the ground running. Right. And we had a need for capital markets lawyers, which is a very specialized area. And there aren't that many of them because we were doing securitizations, warehouse lines, loan sales. So I needed to get some really strong capital markets attorneys. And we were lucky to do that. I hired two capital markets attorneys and then a third, both from firms that practiced in that area. And I would say the one exception, there was a young attorney who, he really wanted to work at Sofi, and he kept badgering me. Finally, I interviewed him, and he reminded me so much of one of our young business executives. And he had been a contract attorney at the DOJ. So I liked that because he had some DOJ experience. He turned out to be amazing. And just developed incredibly well at the company. But I was looking for people from a law firm with experience who could make decisions, because I think in-house you have to make decisions, and you can't research something to death. The clients are looking at you. Can we do this? Can we not?
Exactly.
What's the alternatives?
Yeah, and the clients are the business, right? And so there's a special skill that one needs to have in order to be able to be a legal expert while still also work with the business. Did you feel that working at a firm also lent some credibility to there? Or was there a certain type of aspect somebody needs to pick up in order to gain that skill?
I think it was my experience at Sally Mae that helped me, not the law firm necessarily. Although, like I said, my experience at Powers Piles was good because I had to be self-sufficient with technology. But, really, as an in-house lawyer, your job is to weigh risk. And it's not to stop transactions unless they're clearly over the line. I always say that my job is let people go up to the cliff, but make sure they don't go over the cliff. So I think the biggest attribute you can have as an in-house lawyer is your ability to weigh legal risk. You're a business person like anyone else, but your business is legal risk.
Right. No, that makes perfect sense. And looking at the fact that you potentially could be the decision maker on the largest deals that can push a company forward is a huge deal. And it's something to think about on both ends. So SoFi acquires a bank. What were the most complex legal and regulatory issues that came along with that?
That was probably the most challenging challenging time in my professional career of trying to get the approvals. We decided, if we were a large, originator of consumer loans, and interest rates were starting to go up, and essentially, the beauty of having a bank is you have a low cost source of funds. You have consumer deposits, which you can use to lend. And so you have stability. That gives you a lot of stability that, in a rising interest rate environment, it's extremely difficult for non-bank consumer lenders to be in business because, they're under such pressure from a funding standpoint. And your warehouse lines are only as secure as the time. And so if there's a crisis, even if you have a secured warehouse line, the lenders are going to pull that. And so you have to be, I think we made the decision, that becoming a bank was the evolution that would propel us forward. Now, it was very difficult because at that time, there were not a lot of de novo banks. And the FDIC, I think, was not in favor of awarding bank charters to fintechs that were not GAAP profitable. So the avenue, and Lending Club had done this first, was to acquire a small bank and then seek change of control approval. And so we bought a small national bank in California, and then it was a very arduous process to get it. We had to get approval from the OCC, but then to be a bank holding company, we had to have approval from the Fed. And that was extremely complex. I mean, it required a strategy that included using all your political assets as well, because it was a very difficult time, and there wasn't a lot of precedent. There was only one fintech that had become a bank. And then Varo was trying to become a bank. They ultimately did, but it was very costly. And you have to use a lot of experts. I'd say it's extremely costly, and you have to have a lot of patience. And the other complication was we had a small crypto business where, we didn't hold crypto, but we offered our customers the ability to buy and sell crypto. We had an omnibus account at Coinbase, and the Fed deemed that to not be a permissible activity of a bank holding company. So that was a challenge in terms of getting the charter. And we ultimately got the charter, but the Fed, and this is public, put in a condition that we had 2 years to either reform that business or get out of the crypto business, which we did. But I mean, that was probably the most pressure-packed time at SoFi because it didn't look like we were going to get the charter. Anthony Noto, our CEO, and I were on numerous phone calls with Fed officials, Fed lawyers, and at one point I thought, oh, this is not going to work out. But we miraculously, persevered and obtained the charter primarily through Anthony's force of will, and he was a great CEO to work with.
That's incredible.
Yeah, he had been the CFO of the NFL, partner at Goldman, and the number 2 person at Twitter.
So that leads in, you say the NFL, that must lead into the fact for Sofi Stadium as well.
Yes. One of the things we wanted to do at SoFi was increase our unaided brand awareness so that, consumers thought, when you think of financial services, who do you think of? One way to do that was to do a stadium sponsorship. And as I said, Anthony, our CEO, had been the CFO of the NFL, knew Roger Goodell, knew all the players. And when the stadium in LA was being built, we bid on the naming rights, and we were successful. I helped negotiate the transaction, which was a very difficult negotiation. I had never done a stadium sponsorship deal. Quickly learned what the issues are, such as, what are your blackout events, your force majeure clauses, et cetera.
Wow.
And then COVID hit after we had signed the deal. And so the first year, the stadium was empty. So we had to renegotiate the payments for the first year, but it's worked out beautifully because the NFL just attracts so many fans. And then we had the Super Bowl, which ironically was a blackout event, but they kept our sign up on the roof. So it's worked out really well. And I think it's increased, the brand awareness of SoFi dramatically.
Sure. Absolutely.
That was before we were a public company and before we became a bank holding company. So we were still a relatively young company.
As the company continues to grow, there are more regulatory compliance issues, litigation that comes up. With your experience being the DOJ, has that sort of helped you with dealing with litigation in many different areas?
Absolutely. I mean, I think, first of all, I think I took an unusual path to GC because most GCs were corporate lawyers, before they became general counsel, and I was primarily a litigator, but I had done corporate work at Sally Mae as well and had worked on derivatives and structured notes. So I was, fluent in both sides, litigation and the corporate side, and I had done a lot of M&A at Sally Mae. So, but I think that my litigation background really came in handy because, let's face it, every financial institution is going to have scraps with its regulators, government, and then, litigation. One of the biggest areas of litigation for, banks and financials is Fair Credit Reporting Act. So I think my experience helped quite a bit. But, I would say that the amount of regulation as a bank holding company and bank compared to a fintech, it's night and day. And you can't really, and it's hard to even anticipate how difficult it is. So for example, today, SoFi went from a de novo basically to a $30 billion asset bank in 2 years, which I think is the fastest ever. And we have the OCC as the primary regulator of the bank. The Federal Reserve is the regulator of the bank holding company. And when we crossed 10 billion in assets, we had the CFPB as a regulator as well. So I call it the trifecta of federal regulators. Plus, we still had some businesses where we had money transmitter licenses. We had state regulators as well. So, that's why I said the compliance and legal team kept small, but the compliance team and the overall team grew to almost 200 people.
Sure.
When I got anti-money laundering group was put under compliance, and as a bank, that's a really significant function, really important function. So, and you've got to basically grow your risk management, commensurate with the growth of the bank. So tremendous investment in risk management and compliance as a bank holding company, totally different than anything you could expect as a fintech. And
Sure.
very few have done it. So it is difficult, and it's really hard because you have to invest in non-revenue areas.
Yeah, and you have to potentially release some areas of revenue, right?
Exactly. Yeah.
With the hope that you'll get what you need to be able to grow.
Crypto was bitter pill to have,
Sure, especially now.
especially now.
But you never know what the future holds.
Right.
So the trends, looking at different trends in the fintech and banking industries, trends within legal. What are some areas that you see that will be sort of coming up more and more?
Well, I think privacy is a huge area for fintechs. You look at the 1033 rule, you look at the states like California, look at the, people don't realize this, but the litigation involving use of, meta pixels for advertising. So I'd say if you're in fintech, you really have to have somebody who's very well versed in Graham Leach privacy. Then I would say if you're a lender, Fair Credit Reporting Act and kind of the Fair Debt Collection Practices Act, which technically doesn't apply to a direct lender, but they have state law equivalents. And so basically your collection practices, those are the fertile, and TCPA, Telephone Communications Protection Act. So those are the fertile areas for litigation that you have to be cognizant of and you have to be competent at, and you have to have a strategy. One of the things that we work very closely with Experian, essentially they provided a lot of the leads, and we did the soft pulls through Experian and then the other credit bureaus. But if you look at a company like Experian, they probably get 10 or 15 Fair Credit Reporting Act suits a day. So multiply that over a year and think
Right.
of that. Now, fortunately, we've kept ours, much less than I'd say the industry average. But I look at the peers of the company and you can keep track of them, and most of them are being sued regularly under Fair Credit Reporting Act.
Yeah.
And then, I would say, well, we haven't gotten to it, but there was, a critical event in 2017 at SoFi that led to a lot of litigation as well.
Would you be comfortable touching on?
Yeah. I mean, so basically we had raised, in 2017, we had just raised $500 million in equity. We had raised $4 billion in equity as a private company, which was extraordinary, including a $1 billion round led by Sofi Bank, which at the time was the biggest equity raise in fintech. But in 2017, our CFO left suddenly and went to a biotech. And a couple of months later, the founder of the company had a disagreement with the board. There were allegations of wrongdoing, and he left. And we essentially, the company was in a disarray because the founder had left, the CFO had left. We had a lot of litigation. We had a whistleblower case, sexual harassment claims, Fair Labor Act standards case. And there were allegations in the press that SoFi was a frat house, the Uber of fintech, greatly exaggerated, I think. And we had to go to Wall Street, meet with the rating agencies, with our major lenders to convince them the company was viable without Mike, who had been the founding force of the company. And so we were right in the middle of a securitization deal, and I'll never forget it. We somehow stayed the course, managed to close the deal. I spent 2 weeks on Wall Street with a board member, and then 2 board members came into the management. One is acting CEO and one is acting CFO. Steve Freiberg, who had been the president of Citibank Global, so had a great deal of experience, was our acting CFO. And we stabilized the company. And then in early 2018, Anthony Noto was selected to be the CEO. So that was a pivotal event. And I was dealing with a ton of litigation at the time, which my background came in handy.
Yeah, sure.
And I hired some more people. And then we put those to bed at a very, low cost. And then the company, I'd say, that was phase 2 of SoFi, was the Noto, once Anthony Noto got there.
I think that a lot of people wouldn't really think about the fact that a lot of these very successful organizations like SoFi really have to go through pitfalls to the point where it almost feels like it's not going to work out. And hearing about the massive amounts of cases that you were dealing with, I mean, that must have been a feeling in the back of your mind, like, I'm just going to give it my all. But obviously we're sort of behind the 8 ball here.
Well, that was what I thrived on from my background. So I actually like that, like the energy you get from dealing with that. But it's funny, if you go back to the early days of SoFi, when I started in 2012, in early 2013, after we had raised the $80 million, one day we essentially ran out of money. We had lent it all out. So we had to stop lending until we got the warehouse line. And I always said when I went to SoFi, I left a good law firm I was doing quite well at, but I thought this would be a fun, I said in my own mind, there's probably a 50% chance it doesn't make it. Most startups fail. But I consider myself very lucky, to have been at a company that succeeded massively.
Yeah. And from the start, you were there, and now you're retiring while still on the board as well. So as you retire, what are your hopes to achieve in your new capacity on the board, as well as potentially other boards?
Well, first of all, it was very hard to leave SoFi, but I had been there 12 years. I was, it was the right time. And I'd say retirement is a tough adjustment because you're going from 24/7 potentially to nothing. And so it was a great way to leverage kind of my background at SoFi to help the bank board. And I think, my experience as a general counsel adds to the bank board. I really enjoy being on the bank board. In fact, we just spent 3 days in San Francisco at a meeting. You learn a lot. We have great, business people on the board with a lot of experience, different experience. We have a regulator, ex-regulator, ex-CEO of a big bank. So you learn, and I like that, but at the same time, last year, while I was still the general counsel, we made the decision to move myself and our CFO onto the bank board. And I think it's worked out, quite well. And I've been fortunate that I'm also on the advisory boards of some late stage fintechs as well. I'd like to get on more boards, and we'll be interviewing for some as well.
I think any board that has you on is really benefiting themselves greatly, because you're bringing on obviously the startup business side of things, but the legal side of things, and both of those are superpowers. And I have another question before we wrap. Is
Sure.
Looking back on your time at Sofi, what advice would you give to future general counsels or aspiring legal professionals that want to make it in the world of fintech?
Yeah, I think that you have to do your due diligence because, like I said, most startups fail. That's just a fact. So you have to figure out who are the backers, what's their funding sources, what's the management, and are you comfortable with them? And do they have a niche that's going to propel them forward? And once you figure that out, then it's a great move. But you have to be willing to take risks. And I'd say I was fortunate. I did this late in my career. People thought, God, you're crazy. Why would you go to a startup, in your mid 50s? But I did. And it was primarily because I had already done pretty well in my career. So I wasn't going to miss a meal if this thing failed.
Right.
But it's harder, I think, for younger people. So for example, I've, talked to a few of my, some of the lawyers who work for me at Sofi, and as they had opportunities to be GCs of other, startup companies. And, it really depends on their risk appetite and kind of their situation in life. Can they afford it? But if you can take the risk, it's really exhilarating. One of the other great benefits is you get to work with a lot of young people who are super smart. And that was the thing about Sofi. We had these 20-year, I felt like I was working with my daughter's friends when I first went there. But I really came to appreciate how smart some of our people were and how good they were in their 20s. We had an individual, I'd say he was 26. We put him in charge of our mortgage business. He became the number 3 person at Brex, and now he's the CEO of a major fintech. So,
Wow.
and that's been repeated. And the other nice thing is kind of the eco structure of a lot of ex-Sofi people have done startups, and it's an opportunity to invest in them.
Rob, thank you so much for sitting down with me today.
Thank you so much. I really enjoyed it.